Hello, everyone. A very, very good evening to each and every one of you present in this live streaming session. Today, being the 1st of November, the first day of November, as well as the last day of the work day. I mean, the week, sorry, correct? So, look at how the dates and the timings are kind of coinciding. Today being the day of the festival of lights, correct? So a very, very, very happy Diwali to each and every one of you out there, right? May this festival of lights bring success, prosperity, and longevity to each and every one of you present over here. A quick check for everyone who is in our live streaming session for today. Yes, today being Friday, and as and how the time is nearing towards the end of the week. Similarly, people are especially for people in India, for them completely. It's been a holiday, correct, for the majority of you people. So they have utilized this day along with the Saturday and Sunday to have a great time to a great time to bond with family members, a great time to bond with loved ones, right, with spouses, with friends, with boyfriends, girlfriends, children, grandchildren, correct? So please make sure to utilize this time to spend quality time with your family, friends, and loved ones, correct? So a quick introduction about me. I am the one and only Harsh. I have 8 years of experience trading the financial markets. That's right, 8 years, correct? So I'm a financial technical trader, correct? I specialize in technical trading, mainly in the form of supply and demand. I use order flow analysis, trend analysis, Fibonacci ratios trading, so on and so forth, right? I do look at the forex markets as well as the commodity markets, right? The markets pertaining to oil, gold, platinum, as well as the US indices, correct? We have S&P 500, the Dow Jones 30, and the Nasdaq 100. So, with a good amount of exposure to the technical analysis side of trading, today's session is going to be based on that specific, segment. When it comes down to technical analysis, we will be looking at the charts, looking at how the charts are performing, how the markets are moving. Yes, the Indian share market is closed. It was closed for the entire day, right? Now, irrespective of whether the market is open or closed, our third live streaming session, which happens generally after the stock market closes, is for you people to have a better understanding of how the forex market works from a technical aspect, right? Once the market closes, we talk about pertaining to the education side, like providing you with more valuable information when it comes to technical analysis. Nonetheless, the markets are closed, so we have been talking a lot about forex and gold since the morning. Remember, I make sure to provide you with live streaming sessions for 5 days a week. That's right, 5 days a week, right from Monday till Friday, right? Monday, Tuesday, Wednesday, Thursday, and Friday. For 5 days, I make sure, and each day, right, each working day, I make sure to provide you with three live streaming sessions, right? The first live streaming session that happens once the market is up and running. The second live streaming session that happens around an hour closure prior or before the Indian share market closes. And third live streaming session, the one you are watching right now, is based after the market closes, and that's where we dive deeper into understanding um, technical analysis, right? Providing more education towards technical analysis and various trading strategies. So I hope a lot of you people who are present in this live trading session are going to learn a lot, right? Because I'm going to share some valuable nuggets, right, in terms of trading strategies, right? I'm sorry, my voice is a little low, but nonetheless, when Harsh is here, there is nothing to fear, right? As you can see from today's title, how to profit from Forex and gold strategies, Darul. I'm pretty much sure a lot of you beautiful people out there watching this current live streaming session are, have come across some sort of strategy that, has made you inclined towards, let's follow a particular strategy that can make us money. But a lot of people, I'm sure, have come across instances or situations where they have tried to follow a strategy, but it is not yielding them profitable returns. And that is where I come into the picture, right? Having 8 years of experience, right? I hope people can see my fingers, correct? 8 years of experience trading the financial markets. I have, I can bring forward, a vast and a good amount of information that can help you, become better when it comes to, financial trading. So make sure to keep attending all our live streaming sessions, right? The main purpose, right? Our entire context that runs behind why do we provide live streaming sessions? Why does Harsh keep coming every day and keeps talking to us? Why is Harsh doing so much for us? That is the reason, because of us trying to showcase our potential, that yes, since we at dolphin markets are so capable of providing such strong profitability rates in the Indian share market, and since our business segment towards the Indian share market has just initiated, we have just stepped into acquiring clients, acquiring beautiful customers from the Indian segment, right? So we are trying to showcase our potential that we can perform very well in the Indian share market. And if we can perform well in the Indian share market, in the market that we are just trying to enter, imagine what value and services we can provide you, which in which sectors we already exist, right? We are talking about the international markets, we are talking about the forex and the gold markets. Remember, we are established in Hong Kong, in Australia and the United Kingdom, so we have a great amount of exposure and experience when it comes to the international markets. And based on providing such strong profitability ratios in the English share market, I am very much well assured that we can provide you much better returns, much better profitability, as well as value services in the international and forex markets. Remember, we at Dolphin Markets are a forex trading platform service provider, right? We provide you with the platform service, as well as we provide you with education, we provide you with analysis, and we provide you with trading opportunities. I mean, we are giving you the best of everything, right? So please make sure to be a part of this valuable and wonderful community, right? A community that has been showing strength of growth, has been showing potential of massive growth. People are listening to me, people are understanding that yes, there exists a company that keeps its customers at the forefront, right? We are trying to showcase our skills, as you can see on your screen. We have been proving day after day. Remember, all the results that you can see on your screen have been consistent, right? From the time of around mid of September to currently the first day of November. So it's been a month and a half, and we have already showcased with a profitability of 97 percentage. So understand, it's not just based on one or two or three trades, it's based on consistent number of trades. Overall, we have around 27 trades which have been taken as well as squared off, right? We have closed positions and have been able to generate a profitability of 97%. Anyways, enough talk about our potential, our credibility, but it's very important to showcase this at the initial phase of the live streaming session, because people needs to understand what exactly is Dolphin Markets trying to to showcase our beautiful customers, correct? Let's get to the charts and let's start with today's day, right? I mean, apparently today's chat box has been quite empty. I mean, have people run away for the weekend, or I don't know what is happening, right? But nonetheless, when Harsh is here, there is nothing to fear, right? I will do my best in terms of, providing you valuable and essential information every single working day, right? So please stay tuned. Please, learn from us. Please try to acquire as much of information we are providing to you, because all this is for your benefit, right? We are not just talking and providing you with analysis. We also provide you with trading opportunities, right? Opportunities that can make you money, all right? So quickly, we had a very good amount of discussion that was focused on what forex is, what the gold markets are, how the markets look. We did a detailed discussion, right, in the first as well as the second live streaming session. So now we will dive straight into some of the strategies, right, that we should be looking at when it comes into how to better educate ourselves in terms of trading strategies that are profitable. All right, I hope people want to learn this, because this will be very valuable in everyone's trading journey. There are a few people who just want to mirror our trading strategies when it comes to hot stocks, right, and they are doing phenomenal. But there is another segment, and a quite moderate, quite substantial segment, that wants to even learn. They want to learn and earn. You get the point? So they want to learn also, and they want to earn by making money as well. So today we are going to talk, today's live streaming session. This particular live streaming session will be focused on providing you with those tidbits of trading strategies that can make you a better trader. I hope everyone is understanding. For those people who do not understand English, अगर आपको लगता है कि आपकी इंग्लिश कमज़ोर है, और अगर आप चाहते हो कि मैं हिंदी में भी बात करूं, तो प्लीज़ कमेंट बॉक्स में आप टाइप करके लिखिए, प्लीज़ हर्ष टॉक इन हिंदी ऑल्सो. रिमेंबर, our community is growing, right, with more people getting attracted and getting onboarded, right, onto dolphin markets. We are going to have a vast array of people from all sorts of communities, all parts of India, especially having different levels of expertise. Some amateurs, some with mid-level knowledge, some with advanced knowledge. But the main concern over here is the language barrier. So I have to make sure, अगर आपको लगता है मैं हिंदी में ज़्यादा बात करूं, तो प्लीज़ कमेंट बॉक्स में जाइए एंड टाइप कीजिए, please talk in Hindi also, right? So I hope everything is clear. Remember, I'm going to talk in Hindi as well as English, but for me to talk in Hindi, I need people to comment down in the chat box, so that I know that there are people who cannot understand in English, and I will do my best to explain in Hindi. ठीक है? All right, let's get started. Let's look at the charts, and now we're going to dive straight into some of the strategies that we can start looking for, right? Now, one of the main and the most prominent strategies that most people follow is going to be the moving average, right? So we have a moving average. I hope everyone can see my screen. I hope I am audible and there is no issue going on. All right, perfect. So as you can see, we are currently plotting a moving average. Now people are like, so which moving average would you suggest? Would you suggest a simple moving average or an exponential moving average? And to that, my answer is simple. You can use whichever moving average you are comfortable. Just to give you a very, clear and honest review about moving averages. Currently, as you can see, I have already plotted an exponential moving average, right? EMA. EMA stands for exponential moving average. It takes into account the last, X number of candles, X being the period, right? 20. And it emphasizes on the data of those 20 candles as a whole. While if I want to put a simple moving average, if I do put a simple moving average, as you can see over here, let me change and the color and the visibility so people can understand what do I mean. Remember, I am going to use the exact same length, right? So I had used 20 as the exponential moving average, and I will use 20 as the simple moving average. I hope people can understand. The exponential moving average also has the same parameter as the simple moving average. But for people, you can look, the lines are plus or minus, slightly different. They can never be exact because we are using different calculations based on the moving average. But nonetheless, if you are comfortable with using the simple moving average, that is also good. I personally prefer the exponential moving average. I hope that is clear. All right, now that we are looking at the moving average, the first strategy that I want to focus on is looking at the moving average. Now, people would be like, Harsh, okay, this is the moving average, but what is the strategy that revolves around moving averages? And the answer is quite simple. When price goes away from the moving average, let me change the color of the arrow to orange. When price moves away from the moving average, I hope people can understand what do you mean by away. The moving average right now is this line, as you can see, correct? So when prices are away from the moving average, like the one over here, there is higher probability for prices to come back to the moving average. What exactly is a moving average? Moving average is nothing but the average price of the last X number of candles, right? In this case, since we are using 20, we consider the last 20 candles of this particular time frame. Remember, as and how you change the time frames, the moving average will shift, right? Will modify based upon that. Now, as and how, as you can see, whenever price is away from the moving average, price has a tendency to come back to the moving average, because moving average ultimately is the average price, correct? So whenever the price action shifts quite away from the moving average is when you have such scenarios where prices will again try to come back to the moving average. Whenever prices are away from the moving average, prices will come back. So this is the first strategy. I hope people are able to understand. I'm directly jumping into the main content of today, right? Generally, I have more of a hand holder personality where I grab everyone's hands and then I take them, I explain them thoroughly. But today, since we have been talking about the Forex and the gold market since morning, right now it's the time to really, dive deep into understanding a few strategies, that can be implemented instantly, right? This can be possible for any Forex pair, or you could look at gold as well, correct? So I hope people are able to understand when prices are away from the moving average, there is high tendency for price to come back to the moving average. I hope people are able to understand, right? Now let me remove all the drawings. So a simple way to understand what the price is doing, if prices are away from the moving average, like the ones over here, the tendency for price to come back to the moving average is significant. So based on those, you can try to look for trades, right? So this is the first trading strategy that I have been talking about, correct? Now people are like, okay, so that is very good. Harsh, not so, correct? Harsh, that is very good. So, okay, but how can we increase the probability of, price, because the market is going to go up and down. How can we get more probable trades, correct? And to answer that, let me put a modified moving average, right? Which is called as Bollinger Bands, right? I hope people are aware of Bollinger Bands. Bollinger Bands are nothing but the moving average, but it has a deviation of a positive deviation and a negative deviation. Now people would be like, but what is positive and negative? Anything that is above the moving average is called as positive deviation. Anything that is below the moving average is called negative deviation, right? So if I double click and I remember, if I double click on the indicator and I'm going to use a standard parameter of 20, right? When it comes to length, I would be using 20 as the standard parameter, and I'm going to shift this to exponential. So as we had plotted previously the exponential moving average of 20, we are going to put the Bollinger Band, which is exactly a moving average, but with an upper band and a lower band, right? Signaling the upper movement. What is the upper movement and the lower movement? Here I'm going to put a standard deviation of 3. Now these are certain terms. You can play with the values. There is nothing, significant or written in stone. Nothing is fixed, right? In the financial markets, prices keep changing. Prices are always dynamic, correct? So what I'm trying to showcase is we are just using the same moving average, but the only difference is we have an upper band which is currently denoted in red, and we have a lower band that is denoted in green, right? The colors do not make a difference. It is just the representation of the data, right? As you can see on the indicator on the chart. So the only difference is the moment prices are coming closer to the upper band and the prices have drifted away from the moving average. I hope people can see this. The prices have deviated away from the moving average. You can use this to get higher probability rate. As you can see, the prices are inclining up, up, up. They have reached closer to the upper band of the Bollinger, and prices have deviated quite away from the moving average. That is when you have tendency for price to return back to the moving average, right? As I keep repeating, prices generally tend to be as close as possible to the moving average. So if prices move away from the moving average, whether to the upside or to the downside, the general tendency is for price to return back to the moving average, right? Let us see some other example. The moment price comes to the upper band, price returns back to the moving average. The moment price is away from the moving average and is closer to the lower bands, price return back to the moving average. And it keeps repeating again and again, right? So this is another, strategy that you can combine with the moving average, right? The only difference between the first trading strategy and the second trading strategy is based on having an upper band and a lower band, basically, which is called as a Bollinger Band, right? It was termed after Mr. Bollinger, who had invented this particular, indicator back in, I guess, the 1900s, right? And he has been quite profitable. Yeah. So people, I hope this adds more value to what you are learning today. Till now, I had been talking more from a basic point of view in terms of what the forex markets are, what the Indian share market is, what are the limitations of the Indian share market, what are the advantages of the international markets, the forex and the gold markets, how we have, how we are getting more power in terms of leverage, with a minimum leverage of 1 is to 100, with timings, with market timings. When we look at the Indian share market, we get a window of around 6 hours to trade. But when we look at the forex and gold markets, we have almost a window of around 24 hours for 5 days a week. I can see Sophia, who is just entered into the chat room. Hi, Sophia. I hope you had a great afternoon. I hope you had your lunch. And it is always a pleasure seeing you in the chat box. So, we are talking about different trading strategies, right? We talked about moving average strategy, and we talked about the Bollinger Band, right? Now, the other trading strategy that we are trying to focus on. So, I hope people are understanding. I hope people are not finding me to be too fast or too high paced today, because I'm just trying to keep it simple with certain strategies that can have benefit over you, right? So I hope people are having a good understanding. And if you have any question, any query, you can always write down to me in the chat box, right? I would be more than glad to help you resolve your query, right? Now, Sophia is writing, my gold investments have made a profit. Yes, Sophia, we do have been, talking about gold since morning. I mean, gold has been in an upward trajectory for quite a while, right? I have been talking about gold since quite some time. The markets have been, at an all-time high, almost at around 2,800-ish, right? Approximately. Yes, there has been corrections coming in, but that is what we had talked, and we were talking a lot about it as people who had give me a minute, for people who had bought gold when prices were at a cheaper price, like around the 2400 mark, then or around the 2005, and for people who have bought at that price, currently there has been an area where prices have started to be, positions have started to be squared off. People are closing positions in anticipation of US elections, in anticipation of what the weekend holds. So many factors are there, right? And since the month has finished and the new month of November has started, so there has been quite a lot of, decisions that have to be made. But the most important decision that is, going, or that has been the catalyst for the prices to correct, is because of the US elections. In just 2 to 3 working days, right? You have the US elections upcoming on the 5th of November, correct? So you would be expecting a lot of volatility, right? There has been an upsurge in gold for quite some time, and people are quite aware, right, that gold is also called as safe haven, right? When there are uncertain times in the markets, right? When there is a lot of geopolitical unrest across all parts of the globe, and there is uncertainty, the best investment or the best tool, the best financial tool to secure or to hedge trades is the gold market, right? And that is the reason for its exponential moving. So Sophia is writing, my gold investments have made a profit. I mean, of course, who would not be making a profit, who would have traded or invested in gold maybe last year, last week, last month? They have been doing phenomenal, right? Now when we were talking about our trading strategies, even on markets such as gold, you can use the indicator that I had talked about. So we have the exponential moving average, where you can plot the moving average, which is, let me change the parameters because I prefer to use 20. Now people would be like, Harsh, but why do you use 20? And the answer to that is because when I'm looking at it on a daily time frame, I'm trying to connect the dots over here, right? When we look at the daily time frame, 20 is the closest value. In a month, there are approximately 21 or to 22 working days, right? So I would like, the moving average showcases me the average price of the month, all right? That is why the moving average with a parameter of 20 is used. You can use 20. 20 is a round number, so I feel it's easy to understand also. Every time prices, are away from the moving average, like I keep repeating, there is tendency for price to do what? The price to come back down to the moving average, right? What is the moving average? Moving average is the average price. So technically, price should be near the moving average. The more far it goes away from the moving average, the more probability for price to come back to the moving average. I hope people are able to understand, right? So similarly, as of now, you can clearly see that even for the last current segment, the prices have been away from the moving average. Let me draw it over here, and you could see that prices did come back. When prices were away from the moving average, they did come back to the moving average. Similarly, when prices are away from the moving average, they have a tendency to come back to the moving average, right? That is the overall strategy that depicts that moment price goes away from the moving average, prices should return back to the moving average. Then we talked about the second strategy, right? That strategy comprised of nothing but a modification of the moving average, which was the Bollinger Bands, right? So Bollinger Bands are nothing but moving averages themselves. The only difference is they have an upper band and a lower band. Now, the only factor to keep in mind is that we want to give a standard deviation of 3. Now, people would be like, but why 3? I mean, I hope a lot of you would have learned in school or maybe in college about standard deviation, right? They talk a lot about standard deviation in school, especially when it comes to economics and maths. And they say that generally, prices generally, let me draw it out. They are always fixated between a lower standard deviation and an upper standard deviation, right? So they used to talk about something like this, where you have a graph. So basically, the standard deviations used to lie between 2 to 3, right? So there used to be maybe +1, -1, +2, -2, and so on. So I mean, you can go and type on Google standard deviation education and you will get an entire, I just try to revise, to give you a quick revision as to what they used to teach in school. So what the entire crux of deviation is that prices, when they deviate, prices or samples in terms of numbers, when they deviate quite a lot, they generally have a tendency to return to the mean. All right, and that is exactly what Bollinger Bands are showing. The further away price gets from the moving average, the higher the chances of price to come. Bollinger Bands just give you a visual depiction of when prices are away and closer to the upper channel, upper Bollinger Band, the prices generally come back to the. So these are like when the moving average is somewhat over here and price is somewhere here, and it's closer to the upper moving average. Upper Bollinger Band, the prices have a tendency to come back to the moving average. These are certain strategies that can make you good amount of money, right? Today we are talking more. I mean, this particular live streaming session, it's mainly there to provide you with such valuable information. Then second, I wanted to talk about moving average, conversions, divergence. And like I'm pretty sure Sophia loves using this particular indicator. All right, the moving average, convergence, divergence. Now this particular indicator, it also suggests, it has two moving averages, as you can see. Let me draw it out for you. So we have two moving averages and we have a histogram, right? Now with moving averages, what does this entire moving average, convergence and divergence depict? It generally depicts that once prices are above the histogram, so there are two colors in the histogram, a green color and a red color, correct? So when the histogram is positive, right, generally the general consensus is that price should start going bullish, and when the histogram is bearish, there is a general probability that prices should be bearish. Is it always the same? No, right? The markets are dynamic. What we want to try to see is when the moving averages are coinciding with the direction of the histogram, they generally give some of the best trades in terms of when the histogram, right? This kind of curved pattern that you can see, when it is green in color, correct? And the moving averages are above, that generally indicates that the prices will be going up. On the other hand, let me show you an example when the moving average when the moving averages were below, were in the negative territory and the histogram was red. I hope people can see this area, right? When the moving averages were below and the histogram was red in color, that is the time when the markets are falling, I mean correcting. So this is the third strategy that we are trying to showcase. Now, in terms of what parameters are there, should we change the parameters? You can play with the parameters and adjust based upon your liking. Remember, not every parameter has if you play with the parameters, you can customize it based upon your personality, whether you want a moving average, convergence, divergence, which is very volatile. So you have to put smaller parameters, right? You would have to change the numbers. Remember, these values are just depicting the parameters, right? The smaller the parameters, the more volatile the indicator becomes. And the larger the parameters, the bigger the numbers of the parameters, the less volatile, the more smooth it will become. All right. So we just stick to the normal parameters that are showcased over here. Again, let me reiterate and tell you again, when the prices are when moving averages are above the positive line. Remember, the histogram should be green in color and the moving averages, these two lines should be above the histogram, as in should be in the phase of the green color histogram. And that is when prices generally rally, right? I hope people are able to connect the dots. And similarly, let me go back to the past to show you examples when the histogram was red in color, as you can see like over here. And based on that, one second, yeah, when the moving averages were in the negative phase, right, along with the red color histogram, and that is when you could see that the prices are falling. So I hope you are able to connect the dots, right? Let me just type it out quickly so people are aware. Market is bullish when moving average, I'm using short form, right? Moving averages are above the, or moving averages are, you know, in the positive plane, right? What do you mean by positive plane? The green color histogram, right? And vice versa, right? The market will be bearish when the MA stands for moving averages, right? The two lines that are going. When moving averages are in the negative plane, right? Plane as in the color of the histogram, right? So red color histogram. Remember that graph that you're seeing, right? The green and the reds, the name of that particular structure, it's called as a histogram. So I hope I've given you examples. So we have talked about moving average strategy, where if price is above or below, is if price is as far away from the moving average, the tendency for price to return back to the moving average is higher. Second, we used the Bollinger Bands, right? Bollinger Bands are are basically moving averages, but they have an upper band and a lower band. And then we talked about moving average, convergence, and divergence, where prices or it's a strategy where if the moving averages are above the histogram or in the green color phase of histogram, generally the market will have a bullish bias, right? And if the moving averages are below, like in this example, when the moving averages are below the negative plane, as in with the red color histogram, the general bias for price will be bearish. I hope people are able to understand, right? Now, people would be like, okay, so very important, I might talk a lot about this, and people would be like, wow, Harsh, that is super, you are doing excellent job. You are giving us, real trading strategies. But please, people, it's very important to understand that you have to keep practicing it also, right? I can do a lot of talking and I can show you the best, charts, but at the end, you have to learn. Remember, the third live streaming session is about providing you with education, correct? Providing with trading strategies. So please make sure that you are, attentive and you are able to listen and, learn from these. Then there was another indicator which I was, wanting to show you, and that is called as relative strength index. So relative strength index is again basically whenever price is, reaching or let me put it this way, when prices, it generally follows the direction of price. If price is bearish, as you can see over here, the relative strength index will also be bearish, and vice versa. If the price has been bullish, for example over here, the relative strength index will also be bullish. So RSI generally follows the overall market as a whole. So generally, whatever the market is doing, the RSI does exactly the same. As you could see over here in the last current recent data. Oh, Mr. Lee is saying I missed two live streamings. Do not worry, Mr. Lee. We are here every single day, right? 5 days a week from Monday to Friday. Yes, there is a lot of information that I'm sharing, but it's okay. For people who have missed the live streaming session, no problem. Either you can watch the recorded session and learn from it again, because right now, since the English share market is closed, we are just trying to focus on the other international markets as well, right? So that is the reason we have been talking about the forex and the gold market since morning, right? The entire morning for all our live streaming sessions, we have been talking about forex and the gold markets, right? Anyway, so currently, as I was talking about, as you could see, since the market is bullish, it has a similar implication on the indicator, the RSI, relative strength index as well. And as you can see in the last, the last candle, which had slightly a bearish sentiment, the RSI also started to show. So what I'm trying to say is the RSI works in a similar fashion as to what the charts are showing, right? So whenever you feel that the prices are, turning, they go in that particular direction as well. I hope I'm trying to connect as many dots as possible. Yeah. I mean, remember, when I go to, indicators and I click on, like for example, technicals, the list is endless. There are so many indicators, some of them are very valuable. Remember, indicators are mathematical formulae that are derived based on past data. So yes, they do provide you a depiction, but please understand that indicators are mathematical formulations that are based on past data. All right, very important point to keep in mind. Remember, it is very important to understand this, right? That indicators are mathematical formulations that, all right, not that, but that, all right. So indicators are mathematical formulations that are based on past data. Whatever indicator you use is based on mathematical formulations. These formulations are based on the data, what the price action, as in the candles are, letting us know. So be aware that the indicators are showcasing, what the price is doing, as in what the indicator is doing based on past data. Will it always react perfectly to what will happen in the future? No. The markets are evolving, the markets are changing, so do not worry, the markets are dynamic. But as a general consensus, like I had mentioned to you about moving average, like I had mentioned to you about Bollinger Bands or moving average convergence divergence, so overall be aware that as a general consensus, they can help you take better or high probability trades, right? Another thing that I missed in while talking about moving average, sorry, while talking about moving average convergence and divergence, let me put that indicator again. 1 second. We were talking about moving average convergence divergence, right? And I showcased you a strategy that was doing pretty well. But one thing that I forgot to mention is that for moving average convergence and divergence, right, there is another important aspect of it, because the term, the name of the indicator itself suggests what it is. It's moving average, convergence, divergence. I hope people can understand this. The terminology of this particular indicator is based on the moving averages, either converging or diverging. But there is a very, important nugget that I wanted to share, and that was when we use the divergence theory on moving average, convergence, divergence. It is it is another form of strategy that people use with the moving average with the MACD, right? So what happens is when when the moving averages are, for example, creating lower lows, right? So we have a low and we have another lower low, right? But at the same time, during that price action, the prices are going higher, right? So the general consensus is when, let me put vertical lines so people can understand. The general consensus is that when prices are, diverging away, like based on the price chart, the prices, if you put a trend line or any, parameter that showcases that yes, prices have been going on opposite sides, as in terms of price and on the indicator, right? I hope people are able to understand. So when we call these phenomena as divergence, what exactly is divergence? When two samples separate, when two identities separate, that is called as divergence. So divergence when there is separation between the two, and convergence is when there is when they're coming closer, right? So that is the overall depiction of what divergence and convergence is. So basically, with such a strategy, right, when, for example, the MACD indicator is creating lower lows, but price is creating higher high. That signals that now the price movement is going to shift from up to down. I hope it feels great, right? It feels important to understand, right? It shows a possibility of price reversal. That is what I'm trying to showcase. Sophia writes, it feels great to earn money, especially through the stock market. Sophia, yes, you do are making great money. Remember, as we keep showcasing that yes, we are able to provide you with valuable information as well as result oriented strategies, right? But we also want to emphasize that we can do much better in the international markets, the forex and commodity, like the gold markets. Our performance in the English share market has been marvelous, but understand that we have just entered into the Indian markets in terms of acquiring clients. So we are looking to broaden our base, expand our base in the Indian markets by showcasing that we can perform on the local markets. So if you can perform quite well, which is right now at a 97 profitability, I am pretty much sure that we can perform much better in the international markets and the forex and commodity markets, right? So coming back to this last strategy before we would be winding up for today, this divergence theory, right? It's called as divergence theory on MACD, right? So that basically suggests that using the moving average, do not get confused with the full form of the indicator, which is moving average, convergence, divergence. We are talking about the divergence theory on MACD, right? So for this particular theory of phenomenon, right, when prices are diverging, where prices are going away, price both in terms of the indicator, the moving average, convergence, divergence, as well as the price chart, there is a tendency for prices to shift, to reverse. So if prices were going slightly up, now the consensus will be on the opposite side. So we have provided you with almost four or five, right, strategies when it comes to learning and making money, learning and earning. We did not just talk about the we did talk about the basics of what the stock market and what the forex markets are, but today's current live streaming session has been more on providing you with trading strategy. Sophia is writing tonight's non-farm payrolls data, stock market. Okay, Sophia, let's quickly look as to what the non-farm payrolls are. First of all, let me check the time as to which the non-farm payrolls are to, you know, to be. Okay, so the non-farm payrolls is going to come well at the end of our live streaming session, but nonetheless, remember, and I'm making it very clear, with non-farm payrolls, we have the data that is showcased during the non-farm payrolls creates a lot of volatility, right? So volatility means you can make good amount of money, but also be sure of the opposite side too. So because non-farm payrolls are showcased to the public on the first Friday of every month, whenever the first Friday comes into place, the non-farm payrolls are declared, and they create good amount of volatility in the markets. Now, in terms of just quickly looking at what might be the pressure on gold, as you can see, there is a significant gold has been quite bullish, right? I hope people can agree with me on this, right? Now, even based on looking at the moving average, right? The moving averages have been above the histogram. So even the moving averages still indicate that the prices should be going up only, correct? Now, let us quickly look at what was the past data of the moving average, right? So in terms of past data of, sorry, not moving average, my bad, past data of the non-farm payrolls, correct? So the last data of the non-farm payrolls was at 254,000. Currently, the forecast is less compared to the previous data, which is at 106. So, depending upon the general consensus, people are expecting a lower value. So, typically, we can notice that change in the number of employed people during the previous month, excluding the farming industry. So, actual greater than forecast is good for the currency. So, remember, we still have the actual, which is going to come in the next 7 minutes, but unfortunately, we would be done with our live streaming session by that time. But nonetheless, this will be leading to significant movements and fluctuations in price. What they had mentioned was if the actual is better than the forecast, the general consensus for price is to be bullish. And if the actual is less or inferior compared to the forecast, right, or compared to the previous data, the value or the sentiment would be bearish, right? Remember, with such news events, there does come a huge phase of volatility in the markets, right? I hope people have been understanding. I hope I have been able to provide you with a good amount of information, because when we were talking since morning, the context of the first two live streaming sessions were mainly based on what Forex and gold markets are. How are we comparing the gold and the Forex market? But today's session had been straightforward, right into talking about strategies. Remember, just a quick recap. We talked about moving averages, right? So remember, these are strategies. Sorry. So these are strategies. The first one is moving average, right? Then we talked about Bollinger Bands, right? They are basically a modified version of moving averages. Then we talked about moving average convergence divergence, right? Then we talked about RSI, and last but not the least, we did talk about the divergence theory, right, of MACD. Sophia writes, the market fluctuations due to data are too significant. That is correct, Sophia. Whatever data, whether positive or negative data for the non-farm payrolls, create significant fluctuation, right? So people should be careful. Remember, with fluctuations comes a good amount to make money, but like we say, we just do not want to be talking about only the positive aspects. We want you to be aware of all aspects, right? So yes, we do want you to make money, but we also want you to be aware of the negative aspects, such as losing money. So yes, with the market fluctuations, with certain data which are yet to come out today. Remember, today being Friday and today being the end of the week, and with such significant data, there is huge fluctuation, and the market just settles, for the entire week. And remember, with a lot of uncertainty for the upcoming week, whether Mr. Biden will win, or sorry, whether Mr. Trump will win, or whether Mrs. Kamala Harris will win, I mean, that is still the hot topic, and still there is a lot of, neck cutthroat competition, right? Both of them are contesting exactly at neck to neck level. So, I mean, we do have our prejudices in terms of who we want to win, but nonetheless, let the people of America, let the people of the United States of America decide who will be the next 68th president of the United States of America. I hope people have learned. Um, I hope I was able to provide you with a good amount of information. Today, we dived directly into strategy as to what to look in a strategy, how to make money based on certain indicators, so on and so forth. We covered moving averages, Bollinger Bands, we covered MACD, RSI, and we covered the divergence theory on MACD. I hope people have understood a good amount of information today. Today being Friday, I hope everyone has a great time with their friends, families, girlfriends, boyfriends, children, grandchildren. Remember, today being 1st of November, today being Diwali, the festival of lights, I again wish everyone a very, very, very happy Diwali from the bottom of my heart. I wish that all of you, achieve all the success, all the happiness, and all the love they deserve in life. All right. So I will see you back on Monday, and hope you all have a great weekend. All right. So this is Harsh signing off for today, and see you on Monday. All right. Take care and bye bye.